guys to have Riad on tonight. We are going to do a quick product breakdown. No better person to have on to do that with me tonight than Riad, because he sells the most insurance on our whole entire team. So when you sell the most insurance, naturally you write the most products and you tend to know a lot of education. Now, guys, if you've heard us talk about products before, you always hear us say, don't worry about the products if you're not dialing the phone. That is still true, guys. So the reason we don't do a lot of product training is because it's a lot of knowledge that you're like getting, but then if you're not dialing and you're not in the home with clients, it does not matter to you. So a lot of people will be like, well, what age can I write prosperity for? And it's like, Riad, bro, you've never dialed the phone and you've never been with a client. So why are you asking me that question? Okay. So we want to do product, like that's the cycle of how it goes, right? You get the leads, you dial the leads, then you have an appointment with the leads, and then you need to learn the products when you're actually with the client, because you're actually going to write a policy. So those of you that have like paralysis by analysis and you're like, well, I'm not going to write a policy until I know about the products, that doesn't work because it doesn't matter, right? Every single scenario is going to be different. So that's why we only do this once in a blue moon. Because if you're not dialing and you're not going into homes or you're not getting on the phone with clients, none of this information is going to be pertinent to you. You're going to leave this call and you're going to be like, fantastic, now I know when I should write Americo, but then you don't have an appointment to write Americo. So it's like a wash, right? So that's why we don't do this, guys, but we have been having we have brand new agents coming in. We have people getting into the home. We have people getting on the phone, which I'm really excited about and I'm really proud about. So we want to give you a couple tips and pointers and kind of just go over some basic knowledge, guys. Again, basic. So we're not going to go into like the weeds about like the year that the insurance company was invented and why they put the product this way. It is what it is. Okay. We're just going to tell you what we think you need to know. So Riad.
Hey, can you allow me screen share?
I would love to. Okay.
I have something that will make this a lot easier since I'm sure we have a lot of visual learners.
Visual learners. I love it. So Riad, you are our top producer. I'm excited to have you on tonight. Thank you for getting on. If you don't mind, I'm kind of going to let you take it away because for a couple of minutes, because you are prepared, which is more than me. And then at the end, or as you kind of die off with your wonderful training that you're going to give us, I'd love to go over a couple different scenarios and questions if you're open to that.
Absolutely.
All right, let's rock and roll.
Yeah. So when I first started, I'll point this out because this is pretty big. When I first started, I was told the same thing, just get on the phone, dial, don't worry about it. And we didn't have a lot of the tools that you guys have. Like in order for me to figure out what to write a client, I literally had to pick up the phone in front of the client and I had to call Erica and I had to say, hey, they're 55-year-old female, they're non-smoker, they have this medical condition, they're taking this, and this. What would you recommend? And then she would tell me, and then I'd get off the phone and I'd go to that. You guys have the Genie, which is absolutely amazing, makes it a lot easier for you guys. And then you guys can also call your upline. So one of the biggest things I can tell you that I struggled with as a new producer was having the client dictate what they wanted, right? You're going to have a lot of people tell you, hey, I want term, I want 500,000, I want this, I want that. We're not order takers. We do help out with an application, but our job is to put the client in the best position possible with what they can get qualified for, right? It's great that the client might want 500,000, but if you don't get them covered for even 30,000, you did a bad job, right? Because having some coverage for their family is going to be a lot better than having no coverage. So as you guys get deeper into selling insurance, you're going to learn kind of what works best for the clients over other products instead of letting them say, hey, I want this. And it's going to come down to you finding out their goals. It's going to come down to you finding out their budget and like what they ultimately want to do. So when I'm talking to a client, I find out exactly what we're going to be doing with this insurance. Right now I'm doing mortgage protection, so it's usually to cover a mortgage. But when I was doing final expense, it's, hey, are you trying to cover your final expenses, whether it be cremation or burial, and then leave some money, or what are we wanting to do? So from there, you guys should just plug in the information you get from the client and kind of make a decision based off of that information that you get, not from them saying, hey, I want this. So if you guys are doing final expense, you're going to be talking to a lot of people that are older, I would say probably 50 plus are the age range that are requesting final expense. So you're automatically going to know that they're on a budget. A lot of them are on a fixed income, and depending on their health, you're going to be putting them with whole life, most likely. When I'm talking to people that are older, and I know that some people have rules where they won't do term on, someone a certain age, I always try to put the client in something. If they are, like, let's say they're retired, I always try to put them into something that's going to be there, even if they were to outlive, the age range that the insurance company thinks that they're going to make it to. So for me, I do have kind of set rules where I won't really do term on anyone that's above 65. So it's going to be rare scenarios. So I'll stick to whole life, because those people, if they can qualify for term, there's going to be a good chance that they outlive their policy. So they're going to spend all that money for 10 or 15 years. If they outlive it, then they're going to be uninsured. They're going to be in their 80s looking for insurance, and it's going to be astronomically high. So once again, I always try and do what's best for the client based off the information that they give me and what they can actually qualify for.
Riad, can I touch on that real quick?
Yeah, please.
Perfect. I'm just gonna be like the background person that just like.
That's fine.
So guys, basically what he's saying, and there's going to be different scenarios that will break these rules, but generally, guys, this should help you. So that way, when he says generally, if they're over 50, they're looking for final expense, we're going to write whole life. If they're under 50, we're going to write term. And now there's going to be some different things that go back and forth. But what that should help you is when you go into a home and they're, 73 and they're like, I'm looking for term, automatically you should have a thing that goes off in your brain like ding, 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 probably not, right? A couple other things that are going to be about, well, okay, Riad, just go ahead. Sorry.
That's okay. Is majority of people are doing final expense on this call, I would assume, correct?
Yeah, majority final expense, and we kind of just want to go over like the basic rules.
So one thing that I would absolutely want to touch on is, because you guys will get this all the time, right? I don't have a bank account. So you guys should literally write this down if you don't know this, but every single carrier will require a routing and account number, except for Prosperity, Transamerica, and AIG. So that is one thing that I ran into it all the time, right? And rather than not insuring someone because they don't have a bank account, you definitely want to make sure you get them insurance. As far as products, I mean, Americo's our number one. I've started to really like Prosperity, but I still do Americo a lot. I would say Eagle Premier is probably the product that I use the most, just because of the non-smoker. So whenever I run into someone that is, senior citizen and they're smoking, this is always going to be the cheapest, right? Because they're going to be on a budget, fixed income a lot of the time. So that's what I'll go with. Americo is number one for final expense. Okay. If I'm not doing, go ahead.
And Riad, real quick, I feel like a lot of people, guys, what we do is we just say Americo, Americo, Americo. Let me tell you why Americo real quick. Okay. Americo's our number one final expense and term carrier for a couple of reasons. One, and Riad's going to go over the benefits, but one, they do have the best benefits for the clients. Okay, so client first, Americo has the best benefits. That's why he just talked about non-smokers rate. They don't have that, right? Where a client who's a smoker can get a non-smokers rate with Americo for 3 years. They don't have that any other carrier, okay? Their living benefits are the best, okay? So you guys are like, well, they're not the cheapest. Why do we write Americo? Okay, the second reason is, guys, they have the best benefits for the client and they're the best for the agent as well. Okay, Americo by far has the best relationship with FFL agents in terms of catering to us and what we need to do. Therefore, you have the best chance to get in touch with a customer service rep, to be able to file claims easy, to be able to talk to somebody. We have Bobby and Madison who we could literally message them if we need help. Commissions are paid out fast, things like that. So they're the best for the clients, which is most important, and the best for the agent. They also pay you a 10% bonus on everything you write. Okay, so Americo, again, great relationship with us. They want our business. We need more clients for them. So they pay us extra. So people are like, when we just say Americo, 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 it's not just for no reason. It's because we can act better on behalf of our clients with Americo. Same thing for Prosperity. When you look at companies like Transamerica and Mutual of Omaha, guys, those are big. I mean, and even Aetna, those are big, big, big insurance companies. which is awesome, but they do Medicare, they do Med Sup, they do health, they do life, they do all these things. So naturally, as an agent, it's going to be harder to get in touch with somebody at Mutual of Omaha, Transamerica, or Aetna because there's such big insurance companies. They have so much going on. They don't have as good of a personal relationship with us that Americo does. Okay. Same thing. Prosperity is another great option. Go ahead, Riad.
America also has the easiest e-app, I would say. They've made it a lot easier for us, especially doing telesales. So, but yeah, I'll go over like whole life final expense first, so you guys have an idea. I'll do my personal favorites just so you guys can understand why. But Eagle Premier, it's a no-brainer for anyone that smokes. It's going to be the cheapest option. Also has the best benefits, and like she said, we use Americo just because they are really good, and they have the best benefits, and we do have a great relationship with them. Next one that I use, and this is, I would say, mainly because of telesales, is I probably use Aetna second. They are the one that insures to the oldest, 89 years old. Everyone else stops at 85, I believe. 3 different rate classes. They do not have a height and weight chart, which is pretty big sometimes. And then for telesales, they have a security question. So I'll run into people that are in their 80s. They don't do email. So there's no way for me to have them sign a application. So it's as simple as asking them their security question, mother's maiden name, and I'm able to actually process it and help them. After that, I would say I use New Vista quite a bit. I've grown to love Prosperity just because their prices are very competitive, and they also do have great living benefits. After that, I would say probably Living Promise, 45 to 85. They actually insure up to 40K. All the whole life and final expense products, they all have a terminal illness benefit, which is something that I highlight for the client quite a bit when I'm going over benefits. So just a good rule of thumb is all of these final expense products have a terminal illness rider built in. After that, I would say I'm probably using American Amicable. Don't use it often, but if I need to, I'll go to this. One great tip I have for you guys is if you are talking to someone and they don't know what medications they've taken in the past and you're getting declined, by a couple of different carriers and you're not sure why, because they haven't given you any information, you can run an app with American Amicable, and at the end of it, it will actually tell you exactly what they're taking. So then you can go back into the Genie and say, hey, they're actually taking this, this, and this. What can I do for them? I've started using AIG Simplified Issue. I'm not a fan of their app, so I don't really use it too much. I've written a couple policies with them because they are a little more lax. And then, of course, you have Guaranteed Issue, which is our fallback for anyone that's on oxygen full-time, HIV, active cancer, things like that. Obviously, don't ever want to write it because it's not immediate coverage for them, but that's the one that we use primarily. This chart says 2-year waiting period. If you guys are going to sell this, you have to, don't ever say 2-year waiting period. That just sounds very negative and bad. People do not want to have some sort of waiting period. The way that I phrase it is, hey, for the first couple of years, this is going to act like a savings account where if you were to pass away, your family's going to get everything that you put into it plus 10%. It's much better than putting it in the bank because you don't get 10% in any account.
So real quick, Riad. So what you guys start to notice is that every carrier and every product, there's a reason that we have it. And also there's a reason that your managers, the Genie, whatever person you're reaching out to for help for is telling you to write it. Right. And as you start to learn the products a little bit better, you'll start to get these little, I'm just calling them ding, ding, dings in your head, right? Like Riad said, Aetna, the thing about Aetna, it's the only carrier that has no height and weight chart. So if you get someone who's, hey, I'm 5 foot, 350 pounds, they can't be approved anywhere but Aetna. Right. So when you call, and these should just be little things, you're not expected to know everything, but if you can take notes on a couple of these little tiny things, they'll help you in the home. Right. So that way, when you get up there, right, Americo's term, everybody's term cuts off at 60, if not before. Americo's goes a little long. But so when you get in the home and they're like, boom, 70, I want term, ding, 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 70 is too old for term. Okay, same thing like Prosperity New Vista has 3 different levels. Aetna has security question signature. So when you're on the phone and they're like, I have no ability to do text and I have no ability to do email, ding, 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 that has to be Aetna, right? Same thing with, they automatically tell you off the bat, hey, I have a social security card. I do not have a bank account. Ding, 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 ding. Which ones are the ones that Riad just said? So that you guys can start, right? So start writing these little things down. So that way, when you call, you're not like, hey, I get calls all the time. Hey, Riad, it's Marissa. I'm sitting in a home. Guy 63. He does have a direct express card. I'm trying to run Americo, but it's not working. Like, yeah, it's not working because Americo doesn't take that, right? Hey, he's 5 foot, 350 pounds. I was thinking Americo. No height and weight chart has to be Aetna. So these little things, guys, will help you, and all the other stuff we can help you in between.
Yeah, and to be honest, guys, like this right here, I know, and I'm going fast because I don't want the call to go too long, but I use probably 4 to 5 of these products, and that's it. I don't use anything else. It's Eagle Premier if they smoke, Term 125. If CBO 100 makes sense, I'll use that. Family Freedom Term is probably my #1 product right now because I do run into a lot of people that are on a budget, and it just makes more sense for them. New Vista and Aetna. I mean, and AIG for the guarantee. That's literally it.
Yeah. So guys, you don't need 100 of them. And also, guys, what you'll notice is Riad sells and helps families based on the benefits and what it does for him as an agent and the underwriting, not on price. Okay. So he did not say Mutual of Omaha, even in his top 5. Now you guys are like, well, Mutual of Omaha is the cheapest. Guys, selling on price never works. And if you're an agent outside of FFL or even within FFL who writes a bunch of Mutual of Omaha, people are going to come in and replace that day after day after day because you sold on the price. People would rather pay more for products that are going to have better benefits and easier underwriting, right? If I know that Americo will approve them on the underwriting, and I know Mutual of Omaha might be cheaper, but they're going to kick back 700 million different emails about, you need to send this in, you need to get the social security card, you need to get the ID, you need to send in their firstborn child, you need to send in their ID from 7 years ago when they lived in New Mexico and now they don't anymore. Guys, I have never, and I'll be honest with you, in my 2.5 years that I've been here, I have written 1 Mutual of Omaha policy, and it was on my sister. Okay, every single other policy that I've been able to write has been with other carriers because Mutual of Omaha is I want to sell on price company. Okay, so remember, guys, we're not here. We protect families based on the product that is the best for them and the underwriting that's going to approve them. Mutual of Omaha, guys, declines 80% of the applications that we send in. And I didn't just make that up. I have it in my back office that our entire agency, 80% of what we send into Mutual of Omaha gets declined. So that's why when Riad says, I write with Americo, I write with Prosperity, I write with Aetna, and then probably AIG, an American Amicable, it's because he's trying to get clients that are actually going to be approved and not waste any time. Okay, sorry, go ahead, Riad.
No worries. And then to go over term, I know we're going to talk about scenarios after, but I used to write this and I didn't even know we took a 30% commission hit on this, and it's really only like $15 more for the client. Like, to me, I also got to make money for me and my family, right? If I'm going to be working as much as I do. So I literally pretend like this doesn't even exist unless I run into someone that's like in their 60s. They have a certain budget. They absolutely want to have all the living benefits and everything. Then I will write it because it is cheaper. But ever since Family Freedom Term came out, this one is it has such a competitive pricing. It has all the living benefits. They're not as good as Americo's, but they still get full living benefits. And they're a lot more lax than Americo from what I found. But Term 100, you guys can use it. Just be aware that you are taking a 30% commission hit. So I always use Term 125. These products, CBO 100, Term 125, and Term 100, they all have full living benefits. This is where, like, I used to sell based off of just the benefits. You don't have to, if you are selling anything off of price, you're not doing it right. I promise you guys, like, don't sell off of price, sell off of what the client's budget is. That's way different. but don't just sell because you look at it and it's the cheapest to you. You're doing a disservice to these clients. But all these, the Term 100, Term 125, CBO 100, they all have full living benefits, 100%. So if someone has, some sort of critical illness, they can cash in the full policy that they got covered for, right? So really good products. They are, more expensive, but the client is paying for that, right? For those living benefits. Because if you do, let's say family freedom term, which I love, but the critical is only 25%. I mean, that's a big difference, 100% versus 25%. So definitely sell based off of the benefits on those products. CBO 100, I do write quite a bit. It just depends on the client's goals once again. So for me, when I'm doing mortgage protection, or even final expense, if I'm talking to someone and they do have plans for retirement, to me, that is a great option for them if they can qualify for it. So I'll talk to someone that has a 30-year mortgage. And let's say they tell me, hey, I plan on paying this off in 20 years, right? So I'll look at a 15-year CBO and I'll tell the client, hey, you were going to end up giving the mortgage company X amount of payments every year. Why don't you do it this way? Do a CBO 100, 15 years. At the end of 15 years, you'll get all your money back. You're going to go to the lender and you're going to pay that mortgage off, 15 years early, right? So that makes sense to them. Or you run into someone that is putting money in a 401k, or they are saving for retirement. Once again, you do a 15, 20 year for them. It makes sense because they were going to put that money in investments and all that stuff anyways. Now they're covering themselves and they're still achieving their goal of saving for retirement. So great product. I don't use it a ton, but I do use it in the right situations. I've never written a payment protector, so I'm not going to talk about it. I've never written a continuation, not going to talk about it. Family freedom term, once again, it's one of my favorites now. They do have the best pricing, even though we don't sell off of it. If it is going to be the difference of me getting the client the best possible coverage, I'm going to do it every time. Right. So I'd rather these people have the best coverage for something that fits in their budget and lack on a little bit of the living benefits, but they're still able to get a really good product. So this is a weird product. I've used it a couple times. It is a level term, but it has a graded death benefit. They're very lax on their underwriting. I think they have 3 questions, so it's almost like a guaranteed issue, but it's term. So it goes, I believe, 15, 20, 25, 30 years. The max amount is 30K. And then I believe at the end of their term, they can actually turn it into a whole life product. So I think it's similar to maybe the continuation. Mutual, I honestly don't really write a lot of it. You have Term Life Express. It's max 300. They do have a return of premium available, but you have to do 30 years, I believe, is what it is for them to be eligible for it. I don't use this product that often unless I need to. Term Life Answers. This is full medical exam. I stay away from that. Some people are good with it, but I would much rather get my client approved on the spot and then me get paid 3 days later.
Okay, actually, Riad, let's touch on that. Why would you not want to fully underwrite a client if it was going to save them money?
So one of the biggest things is let's say these people agree to it and they're like, oh yeah, I'm healthy, right? And then they go and they get their full medical exam and something is uncovered. Well, now you guys can't even get that person simplified issue, right? Because now it's on their medical record. So for me, I would much rather, hey, client, let's get you approved on the spot today for this amount of coverage. And you don't have to go through all the, medical exams and all that stuff, because you will run into people that will say, yeah, I want to do it. And then when Mutual of Omaha calls them to schedule all the stuff, they are nowhere to be found. Right. So now you guys lost the sale. Like I have one of these right now that's in the works, but the guy's so busy that he can't get anything done. Right. So I can't even get him covered.
Right. So you can't get them covered. And even if it does issue, guys, it takes about 90 days for the policy to get issued, they requested medical records, doctor comes out, things like that. So God forbid something happens to your client while you're waiting for a full medical background, they don't have insurance. So it would be doing them a disservice. Okay. Also guys, I would say, probably less than 10% of people that apply for fully underwritten actually get approved. It's almost going to be a denial every single time. That's why we do so well in the simplified issue space. It's better to get approved for something today than it is than to get denied in 90 days and then not be able to get something else. A fully underwritten policy, like Riad said, is like a credit report. Like you can't get rid of it.
Yep. Not going to talk about them too much. And not to talk crap, but I don't like their product at all. I've done a couple of them. It just, to me, doesn't make sense when I have all the other options. They do have a good, I like their e-app for telesales because you actually get to follow along with the client signing. But personally, I don't use this. It's my own personal opinion. So I don't know too much about it other than just term. Easy term, I don't really use either. We just have better products than these, right? Like if I absolutely have to go to these, I will, but I think I've maybe done one in the 2 years I've been here. Home protector, I've never done. And that's it really. So for term guys, if you're going to write term, you should be doing term 125, CBO 100, or family freedom term. Those are my opinions. My top two are family freedom term and term 125.
Perfect. And guys, think about that. I want to touch on that. Riad wrote $457,000 of insurance last year. Okay. He's on track to hit Hall of Fame again. Okay. So it's not, I have so many products ever, right? Like you can sell a lot of insurance. You can get a lot of families protected with a few carriers. So those of you who are like waiting and you're like, well, I need to wait until my American Amicable Easy term comes in before I can get in the field. Like, no. Riad is a top producer. He uses America, maybe Aetna if he needs to do a signature, Prosperity. Like it's good, right? AIG if he needs something. Like you don't need to have all of these. Riad, have you ever written Transamerica?
Literally, I have 2 policies under them.
Two policies, guys. So the majority of our business goes to our carriers because they're the best and because they can almost protect everybody. So you don't need to wait for these one-off. Well, wait till I get, F and G, and that takes 6 months to get in because you have to send in paper applications, right? Like you don't need to do all that, guys. It's not that complicated.
Yeah, Erica just brought up a good point too. With Prosperity Family Freedom term, you'll either get underwriting or approved. Whenever it goes to underwriting, that just means it's declined. So, and I know we're going to touch on this, guys. If you have someone that you're putting in a policy and they get declined or they get put into modified or something like that, and you decide to not go with it, that's bad. If you're sitting down with someone and they want insurance, you got to get them insurance, right? I think you tell me a scenario.
Yeah. So Riad, you're sitting with me. I get declined America. What do? We've been in the house for 30 minutes now.
I'm going to stay with you for 2 hours until I get you covered with the best possible option.
Okay. So you're not leaving the house.
No. You got to love the one that you guys are with, because what's going to happen is you're going to rush to go to your next appointment. They're not even going to be there. They're going to no-show you.
100%. Guys, I've sat with clients, decline America, decline Mutual, decline Aetna, decline Prosperity, decline Hancock. I'm like, dude, I am not it doesn't matter. So if you, or hey, they get graded. Right? Hey, I got graded. It came back on Prosperity graded. What do I do? Write the graded if that's what they're going to get. But do not leave the house and think, oh, I'm going to follow up with them or get them off the phone. Oh, they got declined Mutual. Let me try to run it through America and then I'll call you back. Like you're staying there until you get them approved, guys. That's why we have so many clients, or that's why we have so many products.
A great way to do it too, guys, is I don't like to tell people they're declined. So that makes them feel bad, right? So what I'll do is I'll start doing an app, right? And if they get declined, I just go to the next app. I don't say anything. I just do it, right? Because my job is to get them the best coverage. So if they ask me anything, then I'll say, yeah, we submit to multiple carriers to make sure you're getting the best options. But don't tell them they're declined, because you tell someone that they're declined once or twice and they'll be like, no, I don't want the insurance anymore. I'm good. Okay. That's what happened to me in the beginning. So,
Riad, What about the difference in the underwriting between term and whole life?
Yeah, term is a lot more strict. See, I personally, like, I stopped using the Genie a while ago. I've used insurance toolkits, which you guys have to pay for monthly, but it's helped me learn a lot about like what is actually acceptable or not. But term is a lot more strict than whole life, right?
Yes.
But once again, if someone is not eligible for term, even though they're saying they want term, it's your job as a professional to get them into whole life, because them having some coverage is much better than having none.
Yeah, so I think that's an important rule to write down, guys. And I was trying to drop her in the chat because I know we kind of get very conversational. But the first rule that we talked about, general rule, again, these are going to get broken sometimes, but general rule, under 50, you're going to write term, over 50, you're going to write whole life. Okay. If there's something in their mortgage protection, you're going to call for help. Okay. Same thing, right? Term is harder to get. Term is always a harder qualification than whole life. Okay. You can't reverse those. So let's say I go into a home, I sit with Riad. Riad gets declined for term, or he doesn't have the health to get term. I'm going to still get him whole life. Okay. Let's say I go somewhere else and I sit with Riad again and he gets declined whole life. I'm not going to try to get him term. Okay. You cannot reverse the two. If you cannot get whole life, you 100% cannot get term. Okay. If you get declined term, you want to get whole life. It's like moving up to the next step. Okay. Couple other things, Riad, felonies, right? Felonies and some criminal background. Those are more important for term. That means you cannot go ahead, Riad.
No, you're right. That's a big one. Collecting disability. I haven't gotten anyone covered that's collecting disability so far. Some of the carriers in their underwriting says it's on a case-by-case basis, but I haven't. Every time it's, they've gone to supposed underwriting, it's declined. So felonies, disability, what else?
Felonies, disability, if they're not working. So same thing if they're unemployed, guys.
Yeah,
Term,
if they don't have a certain amount of income. Yep.
right. And guys, here's the reason why, because term is giving a lot more coverage out, right? Your whole life products go, but you might get 5, 10, 15, 20, maybe up to 40,000. Term, you're generally getting 100, 200, 300, 400, $500,000 of coverage. Okay. So you also have to think, and this is what I always tell people sometimes too, Riad, is think about if you were the insurance company. Okay. So you get Riad in there. Riad's 55 years old. He's collecting disability. Okay. He's unemployed. And Riad thinks he needs $400,000 of coverage. As the insurance company, does that make sense? No. So guys, remember that life insurance in general is a risk on both ends. It's a risk for the company that you could pay one premium and die, and they will have to pay out the full benefit. That's why the health matters. It's a risk on your part that if I pay the premiums for a bunch of years, I might end up paying a lot of money into the policy. That's it, right? So the insurance company is taking on a big amount of risk. So a lot of the questions, guys, that you have when you're in the house and the questions that your clients are going to ask you can be answered by you thinking, if I was the insurance company, like you can literally pretend I'm Americo, would this make sense for Americo to give out the coverage? If the answer is no, that makes sense. They'll give $30,000 or $20,000 because they know they're gonna have to pay it out to somebody who's disabled and not working, because they're like, the premiums aren't that much, not a big deal. It's not a big of a risk. They're never gonna give $400,000 to that person. If they're not working, they're like, how are you gonna pay the premiums, bro? If you're disabled and you're collecting money, then your family would get 400 grand. It doesn't make sense. Okay. Same thing like with over insurance. So another scenario you guys see is you sit with a client. I sit with Riad. Riad's like, hey, I'm definitely not getting less than $1 million in coverage. So don't even come at me with that. I'm like, cool, Riad. How much do you make a year? Riad's like, $25,000, $30,000. Okay. That doesn't make sense, guys. Why would somebody, you have to think, boom, insurance company. Why would somebody who makes 25 grand a year need to be protected for $1 million? The insurance company, that doesn't make sense to them. Like, dude, you make 25 grand. Even if we gave your family 4 years of your income, that would be 100 grand. That would not be $1 million, right? So always think, guys, when their clients are talking about these things, you can always put yourself up, would that make sense if I was the insurance company? If the answer is no, they're probably going to get declined. Does that make sense?
Absolutely.
Okay, Riad, couple other things. Where do you find these guides? So I think we want you to call us, guys, but where do you find some of the resources if you're not wanting to call your upline, or you're forgetting, or you just want to start to learn this stuff on your own?
So I use your website. Your website's great. If you guys don't have that bookmarked, using it every single day, you should. This is not mine. I can't take credit for this. I pulled this off of Knockout Agencies. So Josh Williams. But like, here's the thing, like when I go above and beyond to learn, like when I'm not selling, I'm learning more. It doesn't matter how far along I am in this business. Like like this right here. I use this still. I know most of it now, but I use this, right? So I go to different resources. I have probably 10 different team websites that aren't even affiliated with us that I go and use their stuff because I'm constantly wanting to learn. So your site is one of the best. You have it laid out pretty well for us. If you guys don't know what I'm talking about, number one, you're messing up, but it's
Are you going to share it?
yeah. It's this one right here. So you guys should literally have this bookmarked because it has everything that you need right here. Like if you go to agent resources, you have, I use all this stuff too. There's like 10-point FEX benefits, Marico HMS, it goes over critical illness, chronic illness, all this stuff that you need if you're going to sell that product. I mean, you have everything on here. So this thing is awesome, especially if you want to do like carrier stuff. You got every single e-app, you have every single quote tool, you have all the phone numbers. If you guys don't have these underwriting guides, once again, you need to have them. This is something that will teach you and it'll show you exactly, number one, what you can, what they're eligible for, but then you also have build charts. You have every single plan, so you know exactly what it is for each company, level, graded, modified. I didn't know what this stuff was when I started. Now, when you guys are first starting, you're in your first month or two, don't worry about this stuff. But after that, you guys need to know this because you guys are professionals. You went out, you got a license. You're the one that's helping these clients, and it is your job to educate them as well, right? So all this stuff I use. Immediate, graded, return of premium for AMAM, their build chart. Foresters, mutual. So
Guys, there's tons of different places to find the information. You know, we said product breakdown. We want to give you a couple general rules, but if we went through, you know, every single product all the way down to the nitty gritty, we would be here till next Wednesday.
yeah.
Because there's a lot to learn, but also on the flip side, you don't need to know all that if you're not going to get with clients. Okay. The other thing I wanted to recommend to you guys or to remind you of that, graded and modified is not a decline. Okay. It's a decline for level coverage. I've had a lot of people that got like, oh, they have to get graded or they have to get modified. So you're like, hey, they got declined. I left the house, right? Or they got declined. Like I couldn't get them. Graded and modified, guys, it's tiers of coverage. So if they can't get level, but they can get Prosperity Graded has a very good product on terms of graded. It actually pays out 30% in the first year and then 70% in the second year. So a lot of people are like, well, they got Prosperity Graded, so I left. It's like, no, you should have wrote the graded. Like that's the best product they can get. So why would you not get it? Okay. Same thing if they do get modified or AIG or, you know, whatever it is, if they get like a guaranteed issue product, that's better than not having coverage at all. So please don't look at like, oh, Riad, they had to get AIG, so they didn't get anything. How is that better than nothing? Right? So the tiers are level, graded, modified, or level and graded and modified are sometimes mixed up in the same. So level, you have that in between 30%, 70%, and then you have straight 2-year waiting period, right? Those all have different levels of benefits, but if that's the best coverage they can get, that's still coverage you want to get them. So we have to have people stop being like, hey, they could only get AIG, so they left. It's like, no, they could only get AIG, so you got them AIG, right? Okay, so just because they didn't get the product that they wanted when you walked in the house, because that's not what they qualify for, doesn't mean we don't get them coverage. So realistically, guys, there are probably 2 or 3 scenarios maximum that you cannot cover with the products. So you also have to get in the habit of, I left without getting that family covered versus there was nothing I could do. Because we have so many options. There's never really ever going to be a time when you have to leave with there was nothing I could do. Even if they're really young and they're unhealthy, you can always get them accidental coverage at the bare minimum. Riad, anything else to touch on?
It would just be like scenarios. I don't know if you want to go over a couple of scenarios. If any of you guys are selling mortgage protection, there are a couple of things that you have to learn. Otherwise you'll be missing out on sales.
Riad, do you want to go over a couple of those scenarios?
Yeah. So, I'm not well prepared. Otherwise I would have shown you guys. I have a couple.
Like when you would break those general rules would be a good one, right? Like,
yeah, so let's say you are talking to someone that has a mortgage, 200,000. Their health is bad though, right? And you know they're not going to qualify for term. So then you need to do what is called an equity protection, or critical period equity protection is what people call it. So basically, instead of you covering the full mortgage for their family, you're going to cover X amount of months instead. That way the family has time to grieve. They have time to kind of figure out what to do next. If they're going to get a renter in there, if they're going to get a second job, gives them time to put the house on the market, clean it up, and actually sell it for what it's worth. So if I come across someone that cannot qualify for term, I will talk to them about a second way that we still can protect the mortgage, which is called equity protection. Instead of covering the full mortgage, the way that we have to do it is we're going to leave your family X amount of time. And depending on their budget, I will show them anywhere from 6 months of mortgage, 9 months, 12 months, 18 months, or 24 months, right? And instead of showing them the amount of coverage they're going to get, I do it in months. So I'll say, hey, there's 3 options for you. Option 1 is 24 months. Option 2 is 18 months. Option 3 is 12 months, right? Option 1 is going to be $200 a month. Option 2 is 150. Option 3 is 100. Which one of those make the most sense for you, right? If you guys don't learn how to do equity protection, you'll miss out on a lot of sales that you could be doing, because you're going to run into, like I said earlier, a lot of people that are elderly and they can't afford, like most people that are in their 60s to cover a full mortgage, it's like $1,200, $1,500 a month for insurance. It's not going to make sense. So now if you have an alternative way where you can say, hey, we can still protect your mortgage, make sure that your daughter or son or whoever has 12 months to grieve and then put the house on the market. This is much better than you having nothing, right?
Right.
So,
and yeah, that brings me to a good point too about the terminology. So this was confusing to me, guys, when I came in because I was new. And so if this is confusing to you, mortgage protection, final expense are just ways to market life insurance, but it's all life insurance. Mortgage protection, final expense, life insurance, final expense benefits for, state regulated insurance programs. Those are all just different ways to say life insurance. So when you go there and you're like, hey, like Riad said, hey, I went there, they were too old, right? Or they were too unhealthy that they weren't going to qualify for term, but they wanted mortgage protection. You can't leave because you're like, I don't have a mortgage protection product because they're not going to qualify. No, you still get them life insurance. It's life insurance to protect their mortgage or life insurance to protect their final expenses, but it all means the same thing. So a lot of people will ask me, well, Riad, what's the difference between final expense and mortgage protection? It's just what they're trying to cover. They're either trying to cover their funeral or they're trying to cover their house, but either way, the products are the same. Term and whole life cover everything. Like term and whole life for mortgage protection, term and whole life for final expense, term and whole life for life insurance, term and whole life for burial, term and whole life for cremation. It's all just a way to market, but it's still the same concept, guys. So don't also get hung up on the fact of, well, oh, I'm here for mortgage protection. And they're like, oh, I already have a mortgage protection plan. It's like, oh, okay, what about burial and final expense? Do you need more? It's not like, hey, I can't get them covered or I couldn't do what they want because it was mortgage protection. Or it was a mortgage protection lead and you call them and they're like, hey, I don't have a mortgage anymore. And you're like, oh, okay, click, and you hang up and you're like, well, they didn't have a mortgage anymore, so I couldn't do the mortgage protection. Like, no, they still need life insurance because that's what we do. So don't get hung up on the terminology, guys. It's going to be all the same products. It's just how you market it.
yeah. And well, I mean, it goes back to like letting the client dictate what they want. If you guys are letting the client pick what they want, you're not doing your job right, right? If I get someone on the phone and they say, yeah, I want to cover the full mortgage, and I go through all their health stuff and their finances, and it literally is impossible for them to do all that, I'm not just going to say, sorry, I can't help you, and get off the phone. No, I'm going to say, hey, Bob, I understand you want to cover the mortgage, but due to your health and then budget, the best way for us to actually protect your home for your family is we're going to do what is called a critical period equity protection plan, where you're going to leave some money behind for your family to make those payments. That way they have time to grieve and they can figure out what they're going to do next, and they don't just lose that home along with all your equity to the bank. Doesn't it make sense for you to have something in place to buy them some time to do that rather than nothing at all? Right? It's a no-brainer to them. But I'm not letting them say, hey, I want this, otherwise that's it. I'm saying, hey, I understand you want this, but this is how we're going to protect your home. Right? And this is one of the ways that is very important if you guys are doing mortgage protection that you have to learn. As soon as I learned this, I started selling a lot more, because you will run into this. I would say I sell probably 60% of the time. I'm doing whole life for mortgage protection.
Yeah.
So something that you guys have to learn. So that's one of the scenarios. I guess another scenario would be a younger person that can't qualify for term. Once again, I'll just go back to, hey, it's better to have something in place rather than nothing. So I'll do a whole life. You guys need to know that Transamerica and I want to say Family Choice are the only ones, I think, that will approve for whole life under the age of like 40, something like that. Is that right? Trans, yeah. Yeah. So if I cannot, yeah, trans and anim. So if I can't cover someone for that, then I'll move to accidental. So I always have something. If they can't qualify for term, move to whole life. If they can't qualify for whole life, I'm moving to accidental. But I'm not getting off the phone with someone without getting them insurance, or I'm not leaving a home without getting them insured. So it's just the different ways that you guys need to learn. But once again, you guys are the professionals. You guys are the ones that went out of your way to get a license, and you're the one doing this every single day. So, and that the more you guys know, and once again, don't worry about all this stuff if you're only a month or 2 months in. That what you need to do is dial the phone and learn that first. But the more you know about the products and how to present them, and gearing it towards their goals and their budget and what it's going to do for their family, the more you'll sell.
Yeah. And I love what you said too about don't worry about it too much. Guys, we learned by doing it a lot as well. So you can read over, and you should go look at the resources and everything that we have. You can read over that a bunch of times, but it's also the best way you're going to learn is to do it a bunch of times. So you know how I learned how to write America? Every time I had somebody with diabetes, it's because every time I called and said, hey, Riad, I'm in a home. She's, I'm here with Janet. She's 63. She has diabetes, high blood pressure, blah, and Riad said, okay, that's going to be Americo Eagle. Then I learned the underwriting guides, right? Every time I had a declinable medication, every time I called and said, hey, this person's on warfarin, and they're like, oh, warfarin's a really heavy blood thinner. That's for congestive heart failure. You can't, you got to get this and this and that. That's how I learned. Okay, boom. Now I learned warfarin because I did it 3 times. So the best way, guys, and you can go over the prescription guides and do all this stuff, is to get in the home. Get in the home, get on the phone with people, use your resources and study them and look at them. But also the best way to learn is to understand. And you also learn what you can work with the carriers and not work with the carriers, right? I used to think that if they had cancer, they could just not get approved for anything, until one day Alex Peraza was like, Americo approves them if they hadn't had 2 or more occurrences in the last 2 years. I'm like, wait, what? He's like, yeah, like, why are you writing AIG? Like 2 or more occurrences of cancer. So also read the questions, guys. Right? Like you get in there, you're in the application, you ask Riad, hey, Riad, any cancer? Yeah, I had cancer. When was it? 5 years ago. Oh, okay, perfect. What was the treatment? Well, they just removed it, but I'm not on any meds or anything. Okay, that was 5 years ago. Yeah, they can get Americo. So you're not writing AIG for somebody who had cancer 5 years ago that's completely cured. Right? So also, guys, make sure you're reading the questions and don't get hung up on all this stuff. And the more times you do it, right? I used to, and things change, right? Americo used to never approve Eliquis. You couldn't get Eliquis approved. Okay, very recently, Americo took Eliquis off. So if they're on Eliquis, guess what? They can get Americo. And I learned that, guys, not because I was checking the underwriting guides every 32 days or every day I wasn't like waking up from 6 to 8 a.m. I got to study my underwriting guides. Like, no, I got in the house with clients. I called, I checked when I needed to check. And eventually I learned, okay, these are the meds, right? You also don't learn that, like, if they're on a bunch of antidepressants, anxiety, and sleep medications, you might go to the underwriting guide and the underwriting guide says all of those separately are approvable. And you're like, why the heck isn't this? And it's like, no, Riad, they're on 7 of them at the same time. That's a decline. So you start to learn these little things, guys, that you have to kind of read between the lines on, right? You can be on a depression medication. You can be on an anxiety medication. When you're on 2 of each, plus a sleeping pill, plus all this stuff, then the carriers are like, it's a combination of too many meds. You start to learn those things because you do it so many times and you start to know what to look out for. But if you don't get in the home and you don't get on the phones, none of this stuff that we said on this call will ever matter.
Yeah.
So, Riad, I think that's great. I'm proud of you. Thanks for getting on. Product breakdowns are always a hard one to do because you're like, we can give you some information, but if we give it all to you, we'll be here for 3 years. But if we don't give you enough, you won't know what to do. So it's weird, guys. So we wanted to give you a breakdown that will get you started, give you a couple general rules of what to do, and then also show you where the resources are at so you can start to learn these things and kind of and debunk some of these things that some of you guys are starting to do as you go into the field. So Riad, anything else?
Yeah, I'll show you guys one last thing real quick, because this, for at least for me, doing telesales has been a game changer. So this company has done a great job with this. Now, if you guys cannot afford another monthly bill and you can't even afford leads, do not go and get this. Use the Genie. But if you guys can afford $30 a month, definitely worth it. And I'll show you guys real quick. So you can do either term or final expense. And I just did one for basically my age and coverage, but I'll show you guys. So you can pick 10, 15, 20, 25, 30, all the way up to 40 years. So if I'm looking at term, healthy 40-year-old, I can go through and I can look at who's the cheapest top to bottom, right? So be $134 a month, but they're going to require, and they'll even tell you, they're going to require a phone interview. So it actually tells you, right? Prosperity, it's going to tell you it has living benefits, 30-year, it's only $15 more. And you guys can go through this. So if I pick one of these and they get declined, I just move to the next, right? So it's a great tool to have if you guys can afford the $30 a month. And then also I keep track of my sales in here, which is pretty cool. I just found out about this and I've had this thing for like 1.5 years. You can actually plug in your sales. So it keeps track of every single person that I've helped, what product I did. Then if I need to go back to them, I can literally look at my client list. I can click on their health and I can go and look at all their medical stuff that I entered in. So great product to have.
You can put the medications in there and it tells you which one would be the best, right?
Yeah. So if you go in and I do like high blood pressure controlled, they're being treated for it. They were diagnosed with it 3 years ago. No. And all I'm taking is Lisinopril. And it's for high blood pressure. Currently taking it. I was prescribed it 3 years ago. Boom. So then it'll tell you basically what companies will allow you to do coverage based off of those 2 things that you plugged in. Right. Now you'll run into people that have literally a list of things, of course, how we do, older people, maybe. And you'll look at their medical stuff and they have a bunch of different, like past cancer, anxiety, but definitely after using this thing for like 1.5 years, definitely worth the $29. The thing that I love the Genie because it's free and they do help you out, especially like if they get declined, you can say, hey, what should I write next? But this is quick. I plug in all this. If I get declined, like if I go with MM here and I get declined, I move to Prosperity. Right. So definitely a good tool. FFL does have a code. That's why there's the logo there, top left-hand corner. We actually get a 15% discount off that.
Oh yeah, Minnie put it in the thing, FFL 15.
FFL 15, yep.
Perfect. So guys, and this is all to show you too, is now you have all these resources, you have everyone that you can call, you have the underwriting genie that's on FFL America Slack. So there should be no reason under the sun that if a client didn't want it, cool. If they didn't trust you and wouldn't give their social security number, cool, we could work on that stuff. But there should never be a time where you're walking away from a client and saying, I didn't know what to do with the products, or I got declined, or I left the house, or I didn't have a product for them. Is very different than I just didn't ask for help. So you guys have tons of resources, tons of people to call. You know, obviously insurance toolkits is awesome. I would download that for $29 a month. That's like nothing for you to have that. So there should just not be a time, guys, where like
there's multiple people in the chat asking where the genie is. So that's on Slack, guys. It's going to be on Slack under the FFL America Slack. Your person that brought you on should be able to show you where that is.
Yeah, and if you guys got our emails too, guys, so you should have two Slack channels, FFL Domination and FFL America. America will be the one that has the genie on there. Okay.
One last thing I'll add and then we'll end it. So all of this stuff that I like know, it's not only from doing it, but guys, I used to go out and in the field for 12 hours and I would be like, okay, I struggled with, you know, this, and that, and I would do some studying on it, right? We have 98 people on the call. How many of you guys, like, I know all of you guys are here to change your lives, make a great living and help people out. But how many of you guys are just putting in the motions, but you're not taking the time outside of it to really study and get better at this? Like, take the next 90 days, work your butt off, dial the phone, you know, but every time you struggle with something, go and learn how to fix that, right? So I think that's one thing that a lot of people don't do. They just they're on dial day and they go out and they do their appointments. But how many of you guys are really trying to learn the thing that you're struggling with? Right? If it's, I need to think about it over the phone, have you really like figured out what to say exactly? Probably not. I know a lot of people don't. And I know that because I help people out and I'm like, hey, did you do this? And they're like, no. So take the time, guys. It's worth it. It really is.
I love it. Well, Riad, thank you so much. We appreciate you. You know, there's a reason you continue to lead us every day. So, all right, guys, we love you all. See you next week. And if you're on the West Coast or even Central Time, you got some dial time left. So let's get back on the dials link.